Hey guys, it's Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that helped me build up a sizable loan portfolio in about 2 years and now manage that portfolio. Today I want to talk about the hot topic of the past really 6 months or so. So the time of this recording, this is January 2021, and interest rates are, it seems like every time you turn around, the interest rates hit a new all-time low. So a lot of people, it seems like all over the country, are doing refinances. So they have an old mortgage, maybe it's at 4, 5, 6%, and they want to, or it's a variable loan with variable interest rates, and they want to put it to a fixed rate, a lower, 2, 3, 4%. I've heard loans currently, as of right now, primary residence loans, meaning if you buy a property and intend to live in it, around 2%. Which is just crazy. So 30-year fixed at 2%. The general cost of inflation is 3%. So, I've been asked a couple times about, should I refinance? What are your thoughts on refinancing? How do you think about refinancing? So I've refinanced plenty of times, usually via cash out refinancing. If you guys aren't familiar with cash out refinancing and the BRRRR method, check up in one of these two corners. Again, I can never remember which side it's on, but one of these two corners, and I'll put the video up there about the BRRRR strategy. It's probably the most popular video I have. It's a way to pull cash out. Very popular strategy. So I've refinanced plenty of times, probably dozens of times. And there's different ways to do it and different reasons, different costs involved. So it's not just, I have a 4% 30-year fixed and I want to go to a 3%. Does that make sense? You have some costs that I think you need to take into consideration. It's not just, it's done. Snap your fingers, all the paperwork's done. They actually go through a whole new qualification process. You're not going to have to submit, you actually might, it depends on whether it's a streamline or not, but you might have to submit some more income documents to verify that you do still have a job and you're going to meet some of these qualifications. But first and foremost, you have to make sure, you have to understand why you're doing the refinance. What is the goal of doing the refinance? Is it to lower your monthly payment? Is it to get a cheaper interest rate? Is it to get some cash out? Because you can do that via cash out refinancing if your property went up in value substantially. What is the goal? Is it to shorten the term of the loan? Maybe you've been paying on it for 5, 10, 15 years, and you just want to refinance it into a 15-year loan instead of the 30-year loan that you had before. There's all sorts of different reasons. But you have to understand why you're doing what you're doing. Don't just follow the herd and say, everybody's refinancing, I need to refinance. That will get your rear end in trouble. So, something you need to be aware of is the costs associated with the loan, okay? So, these are just a few that I've gone through and received during my refinance process, but these can add up very quickly. So, the first one, loan application. So right off the bat, they're going to make you fill out an application. You're going to have to submit some documents, even if it's something minor, a minor application online that you can fill out really quickly. You're going to have to submit some information. So that's one. Usually the loan apps aren't too bad, but with the resurgence and low interest rates, they're charging sometimes a couple $100 to do some of these loan applications. Loan origination. So the other piece there is points. So loan origination points. You usually don't see points right now, like I said, with a lot of, with the interest you've had. Sometimes, the government's trying to stimulate people to refinance. So you don't see as many points as you did before. It kind of tries to slow it down. When you add points, when you add fees, costs, the desirability goes down. So you'll see people use points though to buy down the interest. So if you have a 4%, they might say for a point, 1% of the origination. So if it's a $100,000 mortgage, for $1,000, you can buy that down to 3.5%. So you have loan origination fees. You'll have to go through an appraisal. That's what a lot of people don't think. Well, again, are you going through and doing this because your house went up in value? Well, maybe what you see on Zillow isn't what's in reality, or what really is going on. So they'll do an appraisal on your property. These used to be like $300 or $400. I've seen them now $500, $600. So you got to be careful, factor that in. You're going to have to pay that up front before they'll even do the refinance. Title insurance. They'll go through a whole new process to make sure, they'll go through title to make sure that you don't have any encumbrances or loans or liens against your property, because they want to make sure that you still own it outright. Maybe you're not trying to have a family member, or maybe your spouse died or something passed. They'll do a new title policy. Usually if it's not, hasn't been too long and it's the same owner, it's cheaper, but still title insurance can be quite expensive. Doc prep and attorney fees. One of the things that, and when you're spending hundreds of thousands of dollars on a house, you really don't you look at, but you really don't pay much attention to the $50, $60, $100, $200 fees, because you have hundreds of thousands of dollars in stuff that you're paying attention to. So these tend to creep up every now and then. Oh, we had to do a doc prep. We had to have an attorney review this. We had to have them write this up. So you might see $300, $400, $500 just in the doc prep and attorney fees, sometimes higher. So just pay attention. Those are kind of the big five there. Your application, the origination fees, the appraisal, title insurance, your doc prep, and attorney costs. So factor that in when you're doing the math. If you guys are saying, I want to refinance to just because it's a wise investment, because I have a 4% loan, I want to get to a 2 or 3% loan, factor these costs in. If you only think you're going to be in the house 2 or 3 or 4 more years and you're going to sell it, you might not be able to recover these costs. And the 2 most common reasons for refinancing are to go from an adjustable to a fixed, or because you had an increase in the value of your home, and home values have gone up substantially over the past couple of years because the interest rates have gone down, which is allowing people to buy more home. So property values have gone up substantially. So if you're going to do the math, make sure you guys factor this in and understand before you start. If I can just say one thing, if you guys take one thing from this video, make sure that you understand why you're doing what you're doing. Why are you refinancing? If you're going to be in the house 2 or 3 more years, I highly, highly, highly doubt refinance makes sense for you. So check out that other video I had on selling, on whether you should buy a home. A lot of people get into a jam because they buy a home, they move to a new area, then in 2 or 3 years they sell, and they never are able to recover all the closing costs and stuff that they had, even if their property went up in value. And this is something similar. Don't just refinance to refinance. Refinance because it makes sense and it fits into your overall strategy. I hope that was helpful. If it was, let me know. If it wasn't, let me know. Anytime I whip out the old handy dandy whiteboard, things get a little crazy. So I appreciate you guys. Thank you for the questions, and I'll see y'all next week.